Hi there, it's Craig Meathrall from Strategiq Wealth. Well, it's been a very difficult, maybe 6 to 9 months on investment markets. And so in this video, I wanted to remind everyone about the best mindset to have during these periods of extreme volatility, especially seeing some of the downturns we've had over that period of time. And I also wanted to remind everyone that what we do here at Strategiq Wealth to help people preserve their retirement capital so they're not impacted by the short-term market volatility that we're seeing at the current time. Now, I recognize how difficult it is to get through periods of market volatility, because I talk about this every day in my client meetings. So I know everyone knows that it's good to take a long-term view, but this is a short reminder of why it's best to do so. So I'm going to draw a quick sketch of the long-term and the short-term view. So on the left here, I'm going to do our 10-day view. So over a period of 10 days, markets can have quite dramatic events happen. So we can have, markets can fall off cliffs quite quickly. But we know over a 10-year view, it can look very different. So we know over a 10-year view, when we look back, some of these short-term bumps don't tend to look as big. So we know that the bit we've seen over here tends to represent one of the smaller bumps along the way. So this is a reminder of why we need to take a long-term view. Now, especially for retirees, we want to make sure that short-term market volatility has the least impact possible on the length of their retirement capital. So I want to show you what we do at Strategiq Wealth to make sure our clients' money has the best chance of lasting their lifetime. So a nice way of illustrating how we construct clients' portfolios is to use the analogy of a stormy ocean. So what we do know is that the top of a stormy ocean is actually quite volatile, a bit like investment markets. But we know the bottom section of the ocean down here is actually quite calm. It's not affected by the big swings of the ocean at the top. And so for us, the part of the portfolio that represents the calm section is our defensive investments. Okay, so this is our defensive investments down here. And there are things like cash and fixed interest. Now, at the top of the ocean is our volatile investments. But we know that while they can have big swings down, they all over the long term, they're going to have a big swing upwards. And so they're our growth investments. And they are consisting of shares, Australian and international. And you've also got some property in this section as well. So in terms of funding your retirement income, the last thing we want to do would be to sell shares at the bottom of the market to fund your retirement. That's one way of guaranteeing that you won't have enough money for your retirement. What we will do is we want to put a tap on this section, your cash and fixed interest investments, and fund your lifestyle from our defensive investments. But of course, over time, they gradually get spent, and we want to select the appropriate time to sell the shares to help fund your retirement. And so that means at what we regard as the potential highest point of the market, we'll then sell some of those to top up the cash and fixed interest portions. And so that money can then go to fund your retirement. So hope that gives you a good overview of how we go about protecting the longevity of our clients' retirements. So if that makes sense to you, please reach out and get in touch. I'll see you on the next video.